Hello and welcome back to my channel. In this video, I'm going to break down a winning trade that I took this week, day trading pound dollar. This was utilizing a simple break and retest strategy where I was using pure price action. I actually took two trades this week. The first was taken on Thursday and it was a winner. The second was taken on Friday following the NFP major news release for the dollar. Unfortunately, this was a losing trade. However, I managed my profit-loss ratio effectively to ensure that my winning trade was larger than my losing trade. I'm going to talk more about that technique in this video as well as the technical strategy behind the winning trade. As always, all of the software that I will be using is linked in the description below. Please remember to like and subscribe to my channel, and let's get straight to it. Here I am on MetaTrader 5. This is the platform that I use for my trade execution. All of my trade planning and my analysis is carried out on TradingView, which I will jump onto in just a moment. But I wanted to show you the trades so that you could see that these were real trades taken in the live markets. My winning trade taken on the Thursday and my losing trade taken on the Friday, which still put me up green on the week for pound dollar. So now I am on TradingView charting, the platform that I use for all of my analysis, all my planning. Everything that I think about for a trade is carried out on this platform. If you managed to catch my weekly outlook this week, I did an analysis forecast for pound dollar and I had this red line drawn. I felt that if we got a break below this, then we might get into a downtrend, which did indeed happen. In fact, the market opened and on the Monday we did break below this. We got a really nice retest here on the Wednesday, which unfortunately I missed. Very frustrating. I was just busy with my children and it happens. Sometimes you just miss those opportunities. However, on the Thursday, the reason I'm telling you this is because it's important to note that my bias was definitely short. We had a break below this key daily level. We have been trending lower all week, breaking the previous daily lows. From that, I was looking for a short position on the Thursday. And that's the most important step, in my opinion, when you're planning your trade, is to first look to a larger time frame, such as the daily time frame that has the authority, and decide just what is your bias. Are you long biased or are you short biased? Does the market look weak or does it look strong? Once you have that from a larger time frame perspective, you must stick to that decision and use that when you look to a faster time frame for your day trading. So you'll notice, although I use pure price action, I do utilize one indicator, and this is called a previous daily high and low. It's a very, very simple indicator. It just saves me time in looking at the previous day. This dark blue line marks the previous daily low, and the light blue line at the top marks its previous daily high. So it shows me this range, and I can see that on the Thursday here, the market opened in Australia Wednesday evening, and we were consolidating just above the previous daily low. During the London session, we came down, and after that, we got a clear break and closed below the previous daily low. A little pullback here, and then price was dropping down during New York. This is a really nice, simple pattern in market structure, and I'm going to highlight it now just to clarify it with you. So we have the daily open here. During the Asian session, we were making a short uptrend here, making higher highs and higher lows. The London session opened and we pushed up. Then we got this large bearish candlestick breaking the structure here, and the downtrend began. This could have been a nice opportunity for trading London, but I prefer the higher accuracy strategies where we are breaking key daily levels for my day trading. After the London session, but before the New York session began, we got a break and close below this daily key level. And in case you're wondering, the London session usually runs between 7 o'clock in the morning GMT once that news has been released to around about 10 o'clock in the morning GMT. The New York session starts around about 1:30 in the afternoon GMT, usually when the high impact USD news is released, and this will trade until around about 4:30 in the afternoon. As I am based in the UK, my timings reflect that. So we got a pullback up here, and then once the New York session started, we just got a strong bearish drop, breaking this low of the day, and we made a new low down here. This is a very simple view at the way that the markets move, market structure, looking at the peaks, the highs and the lows. So at the start of the day, we were up. We broke the low of the day here. We made a new low of the day. We're clearly down. And this is the foundation for any strategy that involves price action. You need to know what the market is doing, whether it's trending up or down. So I have my daily bias, I'm short. The market structure has had the change in behavior to reflect that we are now short. And I have these key structural points that I can use to use my Fibonacci retracement tool from. So this is a tool I like to use, my drawing tool, to help me to gauge the best place for an entry. Because I want to go short, I don't want to just sell at the lows, right? That would be really daft because you don't want to get in short right at the bottom. It's not very likely to just carry on down. It's like breath work. You breathe in, you breathe out, the market will move up and down. So you need to find the right place to get into the market. And that's why I use a Fibonacci tool. I go from the bodies only, and it will be, in this case, as it is a short, it will be the most recent lower high, which is this point here. And I will drag this to the current low of the day using the bodies only. Now this brings up these three lines here, the optimum trade entry. They are the 79%, 70% and 62% levels, which from my experience has the highest accuracy if you set an order in these levels. The same would be reversed for a long, but obviously this is a short trade. Now you can just set an order at these levels, and sometimes I do that, but because it's summer trading and I've been trying to be a little bit more conservative in my trading decisions to protect my account, I decided to set an alert instead. So I used this really useful tool on TradingView. I set an alert at this level here. And I carried on with my day, which consisted of playing with my two preschoolers. Price pushed up, and around about 3:30, my alert went off on my phone. I knew price had pulled back to this area that I was watching. So I was being a little bit more active on my phone, watching this area, thinking, are we ready for a trade? But it just pushed up even more. In fact, it came and tapped the top here. But we got this wick rejection forming, so that was interesting. We didn't break above this level. If price had broken above where this line is, this structural level here, closed above there, that would have been a change in behavior. We would have violated the structure, and it would have been likely to want to pull back and then maybe have a complete change in the trend. But we got a wick rejection. I still wasn't short at this point. I needed more proof. Then we got this bearish doji candle forming, and I felt that that was good because we were rejecting this level and then we had the bears coming in. So I decided to set an order at this point. When I set my order, I think I got in the markets at this point here, 318, which I felt was a good entry because it was very high up, extended from this low. So I used a stop that was placed above the structural point. So I set a 15 pip stop. And I usually aim for 1.5 hour target. In this case, I set a target that was just a little bit more. I wanted it to be just before the whole dollar amount because I felt like that would act as a magnet, but I didn't want to overstay my welcome. It was a bit late in the day. And again, I'm trading a little bit more conservatively due to summer trading. So I got triggered into this trade. That was a really nice bearish candlestick down. But price pushed up, it was retesting those highs. And at this point, I started to get a little bit nervous, as you can sometimes when trading, wondering if it was going to break. But once we got the second bearish doji forming here, making a really nice double top, price wasn't closing above this level, I felt a little bit more confident to leave the trade. So at this point, I set an alert at my stop and an alert at my target and turned my phone off. Price came down and it hit my target. Now I'm going to just play it on so you can see what happened overnight. It didn't actually come back to my original entry, and following the next day during the London session, we got a really nice drop down. So there was definitely potential and scope there for a larger winner, but it's summer trading. The markets can be a little bit more unpredictable, there's less volume, less volatility. These sort of moves don't happen as often, and I find personally that it's better to just focus on getting those base hit wins during this time. This trade was taken in my live account, and I also day trade with the prop firm, the 5%ers. If you're not sure what a prop firm is, it's where you can trade a company's capital and you take a split of any profits that are made on the account. The 5%ers offer 3 different programs. They have the boot camp program, high stakes, and hyper growth. Depending on what style trader you are, if you are more of a high risk trader or more of a conservative trader, they have different programs to suit your needs. What I like the most about the 5%ers is the fact that they offer a 0 time limit for their programs. Most prop firms only give you a month to complete the challenge, whereas the 5%ers give you unlimited time. And of course, you have to pass a challenge because you have to prove your trading skills. They won't just give you an account straight away. If you want to find out some more information, there's a link below in the description where you can check out more about their programs and see if it's right for you. Finally, I have shown you my best winning trade of the week. I'm going to show you the loser of the week as well to balance it out so you can see the reality behind day trading. It's not all about winners. You take the losers as well. They can't be avoided. Now, in this case, I probably could have avoided this because it wasn't the best trade, but again, it happens. Following on from yesterday, price, we are still in this downtrend. And during the Friday opening, we were kind of consolidating along the previous daily low. We got a nice break below during the London session, but at 1:30, we had NFP news release, which was poor for the dollar, which meant that the pound gained more strength. And we had this huge bullish candlestick up. It was a parabolic move. It was a massive candlestick that went back into the range of the previous day and then broke the previous daily high as well. And once I saw this candlestick close, naturally, I wanted to get into the trade. So I decided to try to look for a long position. Now we had this short red doji here on the 15-minute and then a green candlestick close above that. I dropped to the 5-minute time frame because I wondered whether I could find an opportunity to scalp a small portion of this trade. So what I was looking at, I was zooming in here on just the New York session. We had the huge candlestick up and we got a high forming here from the bodies, a pullback down here, and then as you can see, it's only very, very slight, but it was a slight close above the high here on the 2:10 candlestick. Now I use that as a place to set my fib tool. It's not very large at all, but what I was looking at was a pullback down here, coinciding with this key daily level, the previous daily high. I thought that there would be an opportunity to gain a short scalp. So I set a buy limit order at this point here. I had a stop set. I used a wider 20 pip stop so that it had some more distance. I considered using a 15 pip stop right below this pullback, but I wanted to give it a little bit more room in case we retested this. And then I set a 1.5R target here. So I got triggered into this trade long. Price pushed up and it looked really good at this point. However, it then came back down and I wasn't actively watching this on my phone. I sort of set it and forget it. But I think when you're trading like this on a even faster time scale scalping, you can't really set it and forget it. You need to be watching it actively and see how the market changes. And the frustrating thing about this loss is if I had used a tighter stop, which is what I considered to begin with my tighter target, I would have just made a profit here before it turned. But that's the nature of trading. You win some and you lose some. How did you do in the markets this week? Did you trade the NFP news release? Let me know in the comments below. Meanwhile, if you've enjoyed this video, please let me know by hitting that like button. Don't forget to subscribe to the channel and I'll catch you in my next video. Thank you for watching. Bye.